So we got the tale of two stories here. Yep. One from the traditional stock market, one from the Federal Reserve. Let's dig in. Yo, crypto nation and mining family, what is going on? What up? What up? I see we got Rude in the house. We got Crypto Crab. Got Tech Man. What's going on, guys? What's up? What's up? Definitely smash that lizardy like button, guys. Yo, what's up? One thing I did not check to make sure. Yep, we got audio. Awesome. So what is going on, everybody? What's going on, Nick? Don't forget to smash those lizardy like buttons, all you awesome people out there. Yo! So, as usual, today is Financial Wednesday, guys. So, it's kind of more, what's the market going to be doing? We are in that new fiscal year. It's like some people kind of go 1 month out into the new year for the end of their fiscal year, depending on how they're doing their tax filings. I do it at the end of the year. Done. This is the new year. But as we all know, where the federal chairman, Jerome Powell, is kind of like looking at the market in general, and he's looking at the market still pretty strong. And he's looking at all the manipulated lagging numbers with manipulated data, which is going to be a lagging indicator on his side, guys. So this is going to be I think, a very disastrous situation for what Jerome Powell is about to do, because he's already stated that he wants to do more interest rate hikes this year. But I don't think they're going to be that big, guys. If you are looking at the inflation numbers, what was it, like around October, something like that of last year, it had peaked out right around, what was that, 8.5%, almost 9% interest inflation, right? And since then, it has been cooling off. They have been doing interest rate hikes. And when they do an interest rate hike, it slows down the creation of new dollars. Where these new dollars are being created from is through loans. So basically, the Federal Reserve is sitting there being the issuer of credit. And this credit is going back into the economy, going into the banking system, allowing regular banks to also sit there as they lower interest rates. It allows them to, and it allows the other banks with commercial loans and stuff to entice them with lower interest rates. And this kind of helps. It does help out whenever you're trying to find investment vehicles to go into these companies so that they can grow, create jobs, for an ever expanding population. And when the machine never shuts down, it kind of works. And I say that kind of works because they're always trying to target a 2% inflation rate through year over year, right? So we ended last year with the hottest inflation numbers at the end of the year than we ever have. I think there's only been 2 times in history that we ran interest rates this hot. The depression in the 30s, and then we're talking about the credit crisis that happened in the mid 70s. This was the only time that we were actually seeing this high of interest rates, but even then it wasn't this bad. This is the worst interest rates. Not interest rate. This is the worst inflation that we've ever seen in our lifetimes. And we unfortunately get to experience this. And it's not going to end, guys. And where this problem really is going to start coming in at is we're already watching these big tech companies. They're already laying off people. Meta's laying, YouTube I'll probably start laying off some people. Google will start laying off some people here soon. But we know that Amazon's laying off people. We know that Twitter's laying off thousands of people. This is just the start, guys. As they sit there and raise the interest rates. Now, where we're at right now is that the interest rates just started leveling off. So the stock market is rallying on this idea that the Fed beat inflation. Inflation's going to cool off now. Things are going to be so much better. This is really far from the truth. So basically all they did was they just kind of made it plateau a little bit. Now, if they hold it right here, inflation will start rocketing back up. So they've got to basically get the interest rate ahead of the inflation rate. Now, we're at 4.25, somewhere right around there, right? And he's talking about he wants to raise it 3 more times. Now, where he needs to put the interest, where Jerome Powell needs to put the interest rates at this point, probably looking at about 5.25%, 5.5% interest rates to really kind of get ahead of it a little bit. Yo, what up, Crypto Badell? Happy New Year's to you too, my dude. So with to get in front of this inflation genie, now I still say that to really get in front of this inflation genie, they're probably gonna have to have their Paul Volcker moment. And Paul Volcker in the 80s, nobody's going to be a Paul Volcker. Let's just put that out there. Nobody's going to do it. He got ahead of inflation, period. And he raised it to I think it was over 8% interest to get ahead of the inflation rate in the 80s. And once Paul Volcker got ahead of it, it was still a lagging indicator. It wasn't felt until the mid 90s when the market finally readjusted itself and finally got its debt under control a little bit. The mid 90s up until the tech the dot-com bubble burst. That whole period was because of Paul Volcker with the higher interest rates. And during that whole period, Alan Greenspan was sitting there dropping the interest rates back, making an everything bubble. And that's what led up to the housing market bubble in 2008 and the crash in 2009. It's because they made the ability to just borrow money as easy as possible. I was old enough to know what was going on, but I didn't really participate in the marketplace like that. So you're talking about a time when I was in my 20s where I could sit there and buy a $250,000 house, have only been working for 6 months, and have 0% down payment, period, and still qualify for the loan. That is peak stupidity. Now, retrospectively looking at that. And this is what caused the 2008 crash. Here we are, 2023. We're still running very hot inflation numbers. They don't want to get in front of this. They really don't. They want to have it where it just kind of plateaus and just starts on its own, just kind of, coming over. But what's going to happen is that they're going to hit 5. He's going to push it probably to about 5% to 5.25%, right? And he's going to sit back and he's like, okay, I did it. And he's going to watch it just come right over a cliff. It's going to come down faster than he could expect. And then his only weapon at this point is a reactionary knee-jerk reaction. Instead of just going, here we go, and hands off, and go, okay, we're going to watch this market crash a little bit. It's going to hurt. Real small term hurt right now. and I'll let it extend out a little bit, and then I'll sit there and do a little quantitative easing, bring it to 5%, and then just let it ride. I'm telling you, that would be the probably the smartest thing that he's going to be able to do, but he's going to inch it up. It'll probably hit about 4.75%, maybe 5%. And we will see the market crash out. And it's because the market's flooded with too much money. And with this being said, too many loans got pulled out. Businesses are overextended. They're going to start laying off people. This is going to cause people to dip into their savings, go into more of a credit crisis, and we're going to see a big drawdown, guys. Everything is sitting here saying it. They want to redefine what a recession is. We are in a recession. All the data is pointing that this is a recession. And the only straw that they're holding on to is, well, the job market's still good. It's like, who cares if the job market's still good, is looking good, when one person holds 3 of the jobs that are made out of 10. You know what I'm saying? So if you've got 2 people out of 10 working, because that's really what it's looking like. So for every 6 jobs that are taken up, Hold on here. For every 9 jobs that are taken up by 3 people, there's still 1 job still vacant. And that's pretty much how the market's been being played out here. Is one person's doing 3 jobs. He doesn't get days. He gets, if he's lucky, 1 day off, or he gets a half a day off. And that's really ludicrous thinking. I did it. And that's how you burn a candle at both ends. You burn people out, and then they don't want to work no more. What happens when you have too many people not wanting to work? You have a welfare state. And when you have the bigger the welfare state, the bigger the drug problem you have, bigger the homeless problem you have. Look at these big cities. They have this. They are now homeless encampments because all the conveniences of the big city life are imploding on itself. The economics can't support itself with that high of interest rates in the inner cities. And then when it spills into the suburbs, that's when you know that you're in a complete recession. And I haven't seen a lot of it here in my town, but I have seen it. And I've seen it get a little bit bigger. Not much, but just a little bit. And that's my indicator right there. Just to see it within a 2-year span, you see a homeless population growth within 2 years, you know it's bad. A small little town should not have a homeless problem. Period. That's usually, you hear about it as a big city problem. People get hooked on drugs and then they go live in the street. In small little towns, you don't really see that too much. Usually those people get arrested very quickly, thrown in jail, and then they're put into the program and they're usually scuttled out. And when they don't scuttle out, they consistently get arrested because they go into a watch list, of the local police department. You get a bigger city, they can't do that. And that's where, and seeing it in some of the bigger, every bigger city now, it has huge homeless encampments. That is a society breakdown. That is the economic imbalance in the system. People cannot outpace a lifestyle, period. And unfortunately, we're going to see it get exorbitantly worse because of the fact that Jerome Powell has stated that he's going to be sitting here raising the interest rates 3 more times. This means more people are going to lose jobs. And unfortunately, this hits your local businesses, guys. So as Jerome Powell sits there and starts raising interest rates, Stop doing business with the big guys. Start doing business with the local mom and pop shops. They're going to get wiped out on this. I would rather sit there and pay a couple of bucks extra in many cases and go spend it with the local person. Let those bigger box office companies go out of business, because they're going to be sitting there and unemploying a lot of people as they shut down locations to save profits for their stock shareholders. And not saying that they shouldn't be sitting there making money for their stock shareholders, as these people invested into the company, right? But at the same time, they're going to do this very mercilessly. And it's going to and where it's really going to hurt is whenever the mom and pop goes, hey, I need to get a loan to be able to do X, Y, and Z, right? And so they can expand. And the bank goes, yeah, you're not in the right credit standing with us. You are it's like, and they put people into different loan categories. A AAA prime loan is somebody who has 20% down and can prove the means to be able to pay the loan off, period. Right? So if if you go, it's a 10-year loan for X amount of dollars, and you're able to meet and exceed that loan payment each month and still be able to afford all your bills, this is going to be your AAA prime loans, right? These people are going to be who the bank really wants to loan money out to, because they're like, oh, this is a sure bet. And then you have everybody else. They go into category A. They go into prime, a B prime loan, a C prime loan, a D, E, F. F is where you don't want to be, because like that, F is not like failure. That is people who are in just got done with bankruptcy, or they are new to the credit industry and they have no credit. Bad credit is way better than no credit, right? We've been told this time and time again. Having your foot in the market and finding a place where you can get a little bit of credit line out kind of helps jumpstart that little engine for you. And that was my biggest saving grace when I was in my 20s, was I never pulled any credit. I never started the credit engine on me. That didn't happen until my 30s. And then had to teach myself how to play with it. It's like, bro, I got no credit. Never asked for a bank for a dime. Maybe I should get a credit card. Actually, I wouldn't do a credit card. So this is how I did it, right? I needed a car. The car I found was $1,000. I couldn't get the loan directly, right? So my wife, who was my girlfriend at the time, she's like, how's this? She's like, I have the $1,000. You need a car, right? I'll put that into a CD. And then we'll take a loan out on it. We'll put the CD into your name. And then we'll use the CD as your collateral for the loan. This is what jump-started my credit. And being able to do something like that, and I basically locked it up into a 2-year CD. That's a keeper, sir. Good thing she's got the ring. Oh yeah. That's actually a really good way to like jumpstart your credit without really going into debt. That's the last thing you want to do, guys. You can pull credit, but don't go into debt over it. House is a bad enough of a debt load, right? Versus, if you're going to do a car, get one that just fucking works. You don't need anything nice and fancy. Just one that works. Doesn't have to look all that fancy. Who you trying to impress? You know, it's like you're trying to impress your mom, God, your ego. Because I guarantee you, I have seen very beautiful women getting into some hoopty of cars. Why? Because the guy was just that nice. You know what I'm saying? Like, women will, if you're trying to impress a girl, they will look past a shitty little car, knowing that you have a job, you're a cool motherfucker, and you're taking him out on a date. You can do that too. That's actually a way to gamify your credit card companies. Pull credit out, and then use that as an extension, a 30-day extension of a paycheck. Going, oh, okay, I can spend $200 in credit, and at the end of the month, I've got that. And then you don't have to sit there, and then if that particular month you didn't need your credit card, well, that's an extra $200 you saved for yourself. At least don't have fucking interest. That's where you're sitting there and doing shit. I mean, people don't realize, it's like when you're buying stuff, you're not buying a product. You're buying somebody's fucking name, right? Ford, Henry Ford, right? Daimler Chrysler. It's two people. That's those last names. Armani. It's last name. You're fucking making these families millionaires. You get to go up and go, I got a new Harley. And your wife's, I got a new Prada bag. You're making these people rich at the cost of yourself. And these products are only going up in price on buying them, because the money is going down in price. And I bring this up in this fashion because it's like I want you guys to kind of have this in the back of your mind that you don't have to buy name brand, you don't have to buy a designer. It just has to do its job. Because as we go into this year, as we go into what is truly going to be a fucking recession, when you look at people who are sitting there and who are quietly saying that it's a recession, Warren Buffett, Berkshire Hathaway, has $130-something billion in cash. Why? Because as the market crashes, currency starts to have more purchasing power. The smart money is going into assets that is going to earn them more assets. Everybody thought that Warren Buffett was crazy with him getting into cash so early. He had more funds to start liquidating a lot earlier. So now we're in this situation. The people who are sitting in that have diversified themselves enough. And I don't mean, I've got 50 different stocks. That's still one asset class. Stocks. Are you into stocks? Bonds. Gold, silver, Bitcoin, housing, medical. You see where I'm going with this. It's like you're diversifying out of just one asset class. These people who are more diversified in asset class usually are better off weathering the storm with a recessionary market. And that's what we're rolling into, guys. And as Jerome Powell sits there and starts inflating, raising the interest rates higher and higher, guys, this is going to not only affect you on a day-to-day basis, because that means the items and services that you are going to be buying are going to go up in value, which means that your investable income is going to decrease, guys. I want you guys to think about this. So if you have any idea that you're going to be going, I want to invest X, Y, and Z, know that this year you might be changing the dollar amount on that, because your dollars are not going to go as far. This is just a prediction from people who are a whole hell of a lot smarter than me. There are too many people ringing the alarm bell. if there's something that the government has gotten their hands into and try to manipulate the pricing on it, you know it's going to crash. They are actively sitting there and manipulating the stock market through the Federal Reserve, which is a private entity providing services for the government. Fascism. I mean, let's just call it for what it is. But sitting there and looking at how the markets are going to be responding to this, Bitcoin's not an uncorrelated asset. Bitcoin's going to sit there and fluctuate right along with the stock market. Everybody is looking at all the same investment vehicles. All these investment vehicles are being heavily manipulated. Whenever you sit there and you see, Federal Reserve, that you think the market's beating inflation, you're going to see money come pouring back in. And that's what we're starting to slowly see here, guys. Here's that busy Bitcoin. The market, the whole crypto market is all, mostly, for the most part, is in the green. This is what happens as soon as the market rallied on Jerome Powell, saying that he beat. Now, Jerome Powell didn't sit there and say that he's beaten inflation yet. Like I said, he is going to be raising interest rates even more. It's like, dude's gonna buy some cheap stuff. So, I mean, yeah, it's like, this is going to be a market where if you've got the currency, if you got the money to be able to invest into something, this is going to be the market to really do it in. I'm not telling you guys, it's not investment advice, I got to say that because it's YouTube. I'm not a financial advisor. I'm not your financial advisor. And this is not financial advice. I'm just telling you what I do. This is the market where I look for that is very good for bringing money into. Like I said, during December, I was like, man, it looks like we've plateaued here. It's looked like we plateaued. Here we are, a few days into the new year. Market's already elevating because of Jerome Powell's little last speech that he did. So this, I think, is going to be a net positive for not only the crypto industry, but if you have anything in stock markets like 401ks, through whatever business that you guys are working for, the markets like this are going to be helpful. As long as the market keeps rallying the way that it is, and we don't have any kind of supply chain issues, because right now, I mean, it's kind of like a funny way of looking at it, but if you were running on a hope and a prayer, and as long as everything, the moon, stars, that all line up, you can sit there and produce that product to get it sold, and then you will just barely scrimp by to pay your bills at the end of the month, right? The moment something happens, company goes belly up, that sends a little ripple out. And depending on how those ripples, you get enough ripples in a pond, and now you have a wave. And where there's a wave, there's a tsunami. You know what I'm saying, guys? So this is going to be one of those markets of, if they're trying to do a soft landing, but I don't think there's going to be a soft landing. I don't think that they should try to even shoot for a soft landing. I think the soft landing is probably right now, where it'll level off, and then through the course of the year, inflation kind of cools off because they're not adding anything else to it. We'll see how that goes. We got more Biden, guys. More Biden and Demtards sitting there wanting to spend money in Ukraine for a proxy war that the United States does not care about, because we got issues of our own right here, like a non-secure border, and a economic crisis that's about to happen because fucking spending money. I mean, let's just be real about it. This is all an issue of spending money. But we are seeing that markets are rallying as of today. S&P 500 is up 0.75%. NASDAQ 100 up 0.5%. Bitcoin up almost 90%. The dollar down almost 30%. It's still rallying at 104 on the U.S. dollar index. So the U.S. dollar is still trading strong compared to other currencies. That's basically what the index is indicating. That our dollars are $104. The index is at, and yeah, that's just showing that it's basically still the dominant currency. The Dow Jones Industrial Average up almost 0.5%, trading at $33,000 per share. We got the Russell 2000, which this has got MicroStrategies, ARK Investment in there, and they're up almost 1.31%. So, it's like we see that the market is turning around. Oh, here we go. Bitcoin is over 90%, almost at 1% up. So I mean, like, you can sit there and see how flatlined this market really has been overall with the whole Bitcoin market. And you can still see that the MA moving average is sitting there and still contracting. And ooh, look at that. With the little program that I'm running here, it printed a little buy signal. It printed a buy signal on the 2nd. So on Monday, it printed a buy signal, guys. This might be a buying opportunity, guys. Usually it's pretty good about, like whenever you see, I can zoom in here and it prints out a little X here. That's the little bot program sitting there printing a sell signal. So you could sit there. It could have played a little arbitrage on this. It printed the sell signal upon FTX crash. It was just it doesn't look at the FTX. It doesn't look at news aggregate. It's just looking at what the market is currently doing. So I'm hoping what we're going to see is a golden cross here soon, guys. A golden cross would mean that we might be coming out of this bear market, or at least going into what they call a secular bull run in a bear market. So a cyclical, it means that it just basically traded up in a really nice channel and rallied, and will ultimately crash back down, but it will run in a bull pattern within a bear market. And that's some arbitrage that you can, if you catch it before it goes into a cyclical a bull market, you could have bought before that, and then as it went through that cycle, sold. And if you look at that, that's basically from December 12th through December 17th. If you would have caught it within, that 3 or 4 day window, you could have played some arbitrage on this. Is that the kind of market that I would trade in? No. A little too volatile for my blood, a little too rich for me. Things will suck for 2 years, not financial advice. It depends. It really depends. I think some of this is going to be how the regulators are being pressured right now for making new regulations in the crypto space. This might hold back a little bit because there's a little uncertainty of what the legislative committees are going to do towards crypto in general. Bitcoin, I think, is something that they won't touch. That would be my hope and dream, that they will leave that alone on on the understanding that it is an unstoppable force. Um, yeah, it's like if you're old enough, the movie Blob. Bitcoin's like the Blob. It'll just like it just rolls past you. Will try to consume you in the process. It's the Blob. There's no stopping it. There's no cooling this down at this point. But just, I think once there's once the regulators either A, make regulation and make it understanding of where they're standing at, or two, they just let it be. If they just kind of another thing is going to be how Gary Gensler is going to be applying the SEC rulings now moving forward, because there is crypto regulation out there, guys. It's just that because of whatever circumstances, I mean, I really can't speak for why Gary Gensler hasn't been enforcing any of these rules this whole time. And, he wasn't doing his job. He should be fired. Minimum. But once he sits there and figures out what he's doing, I think we'll see a little bit of a rally in the United States for the crypto industry, and we'll see a lot of that Wall Street money coming back in. There's a lot of Wall Street money just sitting off on the sideline, guys, where all these prices crashed, but it's not like we've lost all of this crypto. But if you look at the stable coins have expanded their balance sheets. So the money's just sitting on the sideline, guys. And it's just waiting for the right time to deploy back in. Okay, guys? And that's my thoughts on it. I think that's why we're starting to see a little bit of a rally. I think as long as we stick with a nice slow rally like this for a little while, guys. Let's see here. Oh, TradingView dropped all my little charts. Oh, I got to redo one of my chart lines, because I usually draw, like I said, I always draw a line right through the center of where Bitcoin is to where I think it should be, and usually I'm pretty close to the median average of what Bitcoin really should be at. Let's see if I can do this. Should be like that. Might not be perfect at the beginning. I'll probably have to realign some of this. So, bam, here we go. I mean, and it's like, and this is pretty much the way that I usually do stuff, is that I'll just sit there and just, okay, what's my timeline on this? Here's the beginning. Here's the end of it. And I try to cut the median, like all this above it, like this is all noise, guys. This is 2018 right here. Here's 2019 right here. Here's where a lot of let me shrink this a little bit. A lot of you guys have been in here. You guys have been like sitting there trading in this double top bubble here. A lot of people that I see that are new here. Except, us OGs, we started way back here, guys. And we watched a nasty fucking crypto winter, guys. A nasty crypto winter. And then we watched the rise. And we, it's like all of this above and too far below this line. This should be your median line. Yeah, I know my chart's a little off now, because I know I had you. Takes me a little while to really set this up the right way, but We should be sitting there trading right around that $21,000 to $22,000 range right now. So I think if we can hit the $20,000 range by spring or summer, we're gonna be doing good, guys. So pretty much, I think the worst of the storm is over, unless we start seeing more places implode. If we see more bigger players implode, that is the only thing that I won't chart for, nor will I say that couldn't happen. Binance implodes, that'd probably be a pretty big hit on the market. Coinbase implodes, be a pretty big hit on the market. Gemini, imploding, be a pretty big hit on the market. Just saying, guys. So kind of just pay mind to, it's like, again, whenever you're trading or you're investing, never invest more than you're willing to lose. It's like I put stuff into investments and I'm like, and it's gone because I can't spend it no more. See, we already seeing Genesis issues. Genesis Digital, it has already shut down their lending desk, and they're having issues with their trading desk already. And they've lost Genesis has lost also a vast majority of their mining because they were the biggest Ethereum miners in the world. They were the majority of the fucking hash rate. So, I mean, take that for what it is. I don't think Genesis is going to be having a very good time. I haven't talked to my buddy Philip over at Genesis to see get an inside scoop on it. Outside of that, I have not. I've heard rumors that Gemini has potentially overextended their books a little bit. Not that users' funds are in jeopardy, but they are in issues with themselves. So that's why we don't leave our crypto on exchanges. See, I know all of you awesome people out there aren't going to leave your crypto onto exchanges. So, I mean, if these exchanges implode, it's not going to affect you guys. Because I know you guys listen to what I'm saying here, and you never leave your crypto on the exchanges. I mean, yesterday was National Keys Day, which was everybody was supposed to pull their Bitcoin off exchanges. Since I never leave my Bitcoin on exchange, I never have to worry about that. So I participate in it all year long. And I hope all of you guys do too. Because if these exchanges become insolvent, they're coming after your funds. Think about it this way. You deposit your money into a bank account. Your money becomes property of the bank, and you become a creditor to the bank. This is how banks are run. And this is going to be the argument that Sam Bankman-Fried is going to try to use, is that, well, the banks get to do it this way, why can't I? There was no fail-safe to stop a bank run, is the argument that I can see him utilizing. Because the way that he was structuring himself, he basically made himself a bank with an insolvent company. I mean, it's like not Joe Keys, not Joe Coins. You know it, Nick. You absolutely know it. So, I mean, like, these exchanges that might implode, it'll affect the price of Bitcoin. I mean, look at FTX. FTX hit the market pretty hard, but it absorbed it. And that's what you want to see is a robust network can absorb it. And we've flatlined out. We haven't crashed any further, guys. Yes. Can the market bottom out further? Fuck yeah, it can. It'll be a long ride down. I'll gladly wrap that noose around my neck and I'll crash with the market. I'll ride it all the way down to zero. Well, it won't go down to zero because I'll still hold it, and when it hits zero, I will buy up as many of it as I can. That's just how I'm going to look at it at this point. I will buy it all the way at zero. Give me all them coins. So, yeah, I mean, like, don't let these market downturns really kind of affect you too badly. I mean, unless you're like myself, kind of like relying on the market a little bit here. Load this out just a little bit here. Oh yeah. Oh, now I can see my charties. Back in the day, I have lost Doge from a site called Doge Vault. Oh, damn! I remember that site. Yeah, they shut down. Weren't they like attached with a Doge faucet too? I remember Doge Vault. I remember now. You remember? I remember. Pepperidge Farm remembers. And, you know, it's like, so I mean, the message of the day is just kind of, if you can cut any fat out of your spending habits for this year, it'll help put you guys into a better place. If you don't have any kind of any cash and savings, start figuring out how you can change that, guys. It's like maybe not even leave it in the bank, or something like that, but you don't have to particularly leave it in a bank, but you want to sit there and have it to where you can have some liquid funds so that during a bear market, you can sit there and take advantage of all the crashing assets. It depends on how, like I said, this only happens if we see a sharp drop in the economy and we see an actual fucking recession going into mass depression status. I mean, we're due for one. It's been 100 years. Just saying, guys. Just saying. I mean, we the last time we crashed was in the 20s. I mean, like a true flat out crash. Our bubble's a lot bigger this time. I think they are afraid to let this one crash because they know whoever this crash is on their watch on, politically, it's political suicide if they let the market crash from where it's at right now, and they all know it. So we'll see how this one all works out. On another note, you want to hear something funny before we get up out of here? So if you guys got any questions and comments or questions, now is certainly the time to ask them. So public filings reveal a $3 billion crypto trader who still lives with his mom. Yo, that is right. A 25-year-old crypto investor traded nearly 3 billion Australian dollars. To American side, it's $2 billion American worth of crypto in 2021. His crypto empire from the comfort of his parents' home in Sydney, Australia, according to public records. The young gun in question, Darren Nyugen, has not spoken about his achievement, his small trading business, PO Street Capital, but January 2nd article in the Australian highlighted it via public filings. Registered at his parents' house in Guildford, Sydney, his crypto business took home about 10.41 million Australian dollars, or $7.1 million in taxes profits for the fiscal year ended in 2021, according to the filings from Australia's Securities and Investments Commissions. This came to a total of $2 million worth of crypto trading over a 12-month period. It was a huge increase from his previous year's takings in, which totaled around $470,000 in 2020. PO Street Capital's auditors wrote that the results showed his net profit increased by 1,404.12% in 2021 compared to the previous year. According to the filings, PO Street Capital had $2.9 million worth of short-term provisions in 2021, alongside $960 in loans it was paying back to him, but no other debtors on his books. He had received $593,750 in dividends from the profits from that year. Jesus, I would love to see that. The reports from the Australian suggested that indicate that PO Street Capital was self-funded to conduct such a high amount of trades that $2 billion through the publication didn't add leverage trading into the equation, which is likely to have been a massive contributor to the inflated trading volumes. Oh, that is crazy. The family has kept silent about the crypto trading business ran by him, with his mother declining to comment on what she knew of the trading activity that occurred under her roof. Meanwhile, Nayujan, I can't even, I'm not even going to say it. The guy that has kept his lips sealed about the business too, including his trading strategies and how PO Street Capital performed from the last financial year, which ended on June 30th. Notably, PO Street Capital's massive uptick in performance coincided with a meteoric rise in crypto prices during that time frame too. So could he do that again within a bear market? Hard to say. Oh, Crypto Bedell just hit me up with a little bit of a question. Good question. Good question. I can answer that here. He just privately messaged me. It's actually nothing bad. So he's for 3D printing. What is a linear rail system? So instead of using the caster wheels that ride in the extruded aluminum, like on the Ender 3s, you can do a ball bearing linear rail system that slides with a lot less resistance, almost like a high end snap-on tool drawer, right? The high end snap-on tool drawer that would be like a linear rail. Girlfriend won a micro Swiss extruder. She's giving it to you. She's awesome. When looking at the options that would fit into the Ender 3 Max, I'm not sure what a linear rail system is. So that's all basically what it is. Bedell, I already have a micro Swiss extruder. I don't run linear rails on my setup at all, so I don't really see a big enough of a necessity for that. That's me. Like, ooh, okay. Yeah, the micro Swisses are pretty good. I'm now using a Sprite. It's a Creality Sprite extruder head, so it's a direct drive setup. It's all in one unit. Really nice. And it allows me to print up to 300C. Yo! That was a decent question. I'm glad I kind of looked over at that. I just happened to see it out of the corner of my eye. And then something that I happened to see that raises red flags in the wrong area. They all were the micro Swiss will just bolt right into what you already have. You are just literally taking your hot end out and swapping it with a micro Swiss. That's all you're doing. And you won't have a Bowden tube going all the way through to the hot end. The micro Swiss is an all metal hot end. So your Bowden tube stops in the cold break. So you don't have any issues with filament clogging because the Bowden tube shrunk away from the tip and allowed a filament jam to happen right above the tip. You want to get a look at the Ender 3s, Ender 3s or the Pursa printers. It's everything. It should be the whole thing. 1 second, let me grab it for you. I have it sitting off to the side here. So this is a micro Swiss hot end. That's all it is. So you could take your existing heater element and your sensor and pull it out of the old one and then put it right into here. And then the Ender 3, the carriage rail, these are the same distance to be able to bolt these into the existing hot end, where the existing hot end is. So you'll get this whole piece minus the wires, of course. I have the Ender 3, but it's highly modded. I would say get the Ender 3 because you can sit there if you need more, if you need bigger. I mean, it also depends on what you want. If you're wanting to print really big things, then you're going to be in like a $500 printer class. But if you're talking about something that can fit on a 9-inch plate, an Ender 3 is perfect. I've got the Ender 3 V2. Any other awesome questions before I head up out of here? And thank you everybody for being here, smashing that Lizardy like button, subscribing, hitting the bell notification, and all that good stuff. If you are new here, certainly check out the links down below. I've got a Discord. It's free to join. Come join the party, guys. Or if you'd like to join the Patreon, I got the links down below. If you are definitely wanting to have your rigs hosted at the Family Mine, get into the pseudo hasher tiers. What are you guys waiting for? That's where you get your VIP access, guys. Yo. That's what's up. John Jermaine FA. Everybody drop those FAs in the Chizzity chat, guys, because you guys are rated F for fucking awesome. Yo. Thank you, everybody, for being here. All that stuff. Nominate Trump for speaker. Oh, yeah. That's true. You can nominate anybody you want. I'm just saying. If you nominate Trump for speaker, can he run for president? Hells yeah. Thank you, everybody, for being here. You guys all rock, man. You guys all rock. So I hope everybody learned a little something today. With that being said and all that good stuff, guys, thank you all for being here. Peace out. Stay savage. And of course, may your hash be high and your watts be low. I'll see you on the next one. Yo!